Hello and welcome to this episode of Transparent ULIPs, a customer education initiative launched jointly by Bajaj Allianz Life Insurance and the Money Mile. With me today is Sampath Reddy, the Chief Investment Officer at Bajaj Allianz Life Insurance. Thanks very much, Sampath. Always a pleasure talking to you.
Thank you, Vivek. Yeah.
What are the other charges and how is this mortality charge reimbursed?
For a customer to avail tax benefits, in the ULIPs, he must have a 10 times insurance cover. If a person is willing to pay, if a person is annually paying, 1 lakh rupees of premium in the ULIP, he must have an insurance cover of 10 times, which is, for the 10 lakhs. The cost of this insurance typically varies anywhere between 0.5 to 2%, depending on the age of the person. These charges, the 0.5 to 1 or 2%, depending on the age of the person, these charges we debit at the, we have to debit because the customer has to, get the tax benefit. Unless if you don't opt for this 10 times cover, he will not get the tax benefit. We are giving this back to the customer in the mortality charges that we debit.
What about the portfolio disclosures? Do you see those getting strengthened? Because one of the criticisms of ULIP was that unlike, say, a mutual fund, the entire portfolio is not disclosed. Are you on par there as far as transparency is concerned?
Yeah, I think the ULIPs, when it comes to the portfolio management and portfolio management techniques and strategies and the disclosure practices, I don't think there is any difference between the, the two types of, the funds one could choose, whether it's ULIP or in a mutual fund space. In fact, even if you look at the performances of the mutual fund versus, the insurance funds, ULIP funds in the larger cap or a mid cap segment, if you in comparison with the mutual funds also, the performance is pretty much similar across the categories, I would say. I mean, depending on which fund does what periods better, and that's all is the different. But whether it is the actual fund performance and whether it is to do with the disclosure practices, I think they're all pretty much a similar platform.
Is the fund statement easy to read according to you?
Yeah, very much. Very simple, very simple. We do disclose the entire, the sector exposure, cash levels and the, returns from a 1 year, 3 year, longer term perspective with vis-a-vis a benchmark, pretty much similar to that of any other, fund returns that are available.
One of the modes of investing, Sampath, which has been very popular of late is the systematic investment plan.
Yeah.
Do you as an insurance company also offer an SIP route for people?
Yeah, in fact, the SIP is actually, ULIPs and insurance products have always been a SIP investments in any case from the beginning, because if a customer is paying regular premium, whether he's paying quarterly, annually or yearly modes, which has been the case all throughout these years, that's how the insurance premiums have been collected. So it was always been a SIP mode. In fact, there was also single premium products available in the insurance space in the ULIPs, but the proportion of the business from the single premium, which is lump sum sales, which we call is very, very small. For the several years, ULIPs are within the insurance regular premium products, which means customers keep paying premiums either on an annual mode or a quarterly mode or a monthly mode. That business is really the bulk of the business for the insurance companies.
How have your funds performed, since you are the money manager and your team handles all the investments?
Yeah.
Have the now that we have a fairly long time period,
right,
that we can look at,
right.
And ULIPs are meant for long-term investment.
Right.
What are the kind of returns that you've been able to deliver, and how have they compared according to you with benchmarks?
Right. So in fact, we had exceptionally good returns for our policyholders for the last 5 to 10 year period. In fact, longer period. Almost all of our funds in the large cap and mid cap category have beating the benchmark. Vis-a-vis in the Morningstar ratings, also if one were to look at most periods of the time, our funds are being ranked at either at a 5-star or a 4-star in the equity platform. So I think our funds have done exceptionally well in the last 5 to 10 year period as well.
And do you the next 10 years, do you see the ability to deliver decent returns? I know you can't quantify and give a number as per the policy. You're only supposed to give 8% as per the regulator.
Yeah.
But more at a more larger level, do you see this market being able to deliver good returns in the next 5 to 10 years?
Yes, India has been a very attractive market globally. India has been one of the best growth markets in terms of its GDP and economic growth. And our equity, our capital markets are very well developed. In spite of so much of headwinds in the last 10 years, in market as such, or even our most equity funds have generated about 15% per annum returns in the last 10 years. I don't see any reason why the next 5 to 10 years will be any different. I think in Indian equity markets, 12 to 15% per annum is good returns to expect for the customers.
Thank you very much, Sampath, for
Thank you,
talking to
Vivek.
us.
Thank you.